If anyone can hear me, please kindly type audio in the chat. Audio, all right, thank you. All right, please let's exercise patience for additional 5 minutes or thereabout, 5 day, and we'll start. Let's wait for those that might have having issues with their connection. We'll kick it off in the next 5 minutes. Hello, good morning once again. If you can still hear me, let someone type audio. We're about to start now, please. Let me know whether you can still hear me. All right, thank you all for joining us this morning for our daily morning market review, where we analyze what the market should be like based on happenings from the previous day, previous week, as the case may be. In this case, we'll be trying to see what the potentials for movement will be in the market regarding certain tradable instruments and whatever fundamental we're expecting, so that we can look for what profitable trades for today. My name is Olabisi Olalero. I'll be the one handling or anchoring today's event, ably assisted by a couple of other of my colleagues to resolve to any of your questions as might be popping in. All right, so going straight up. Every time I run the morning market review, we try to look at the market from two major perspectives, which is the technical and the fundamental, because these two are arguably the most important as against their third counterpart, the sentimental analysis. So first off, let's start from the fundamental reasoning. There are some talking points, because for those of you that have noticed that in the past few weeks and days, the USD has gained some momentum. Sentiment has increased. It could be either of two things. Either it has gone too low across the other pairs, or the fact that it really has gotten an inherent strength of its own. And for those that don't know, there's a way to measure that strength of the dollar. It's called the dollar index. I'll show you that real quick, but hold on. Let me give you the highlights first. The sentiment on the dollar has risen and has gone through a 5-week streak. Since mid-November, it has not gotten to the peak it has in these recent days. And these were also buoyed by the CPI and the unemployment claims released last week. All of this has intensified the sentiment in support of the USD. Also, too, we cannot totally rule out the political situation in the US as regards the Biden and the possibility of Trump coming in as a possible candidate if he wins the primary also to man strength across board. So all of this tends to have its own way. But let's move over to Forex Factory. Let's see this news from last week and what it is that might be affecting the market as regards USD trading for this week. Because we know, like we always suggest, it's always more beneficial or suggestible to trade major currencies, because you have currency pairs, because you have more activities and volatility with this type of instruments. And even if trade goes against you, it's easier for you to retrace in or reverse in your favor, unlike the exotics and the minors. Yes, crosses are also okay too, but we always suggest major currency pairs. So let's move out to Forex Factory. Let's see the news we're expecting for this week. Let's know at what point we may expect some difference in the movement of the markets. So I'm moving out to Forex Factory right now. All right, let me share my screen. Please, if you can see my Forex Factory screen, just type web. I'm on the web browser now. If you can see my Forex Factory screen, just type web. Someone stated my audio is not loud enough. Can you reconfirm that, please? If the audio is loud enough, I need to, all right, loud, all right. So, sir, please, it might just be the network, or you check connection at your end. All right, so moving on. For last week, look at the major pointers here. As I highlighted, you can see that the CPI came good for the years, both the core CPI, both for monthly and even the yearly. For those of us that don't understand, the CPI is a measure of inflation. Inflation is a measure of growth potential in an economy. And for quite a while, and most other major economies are gradually going into recession, same as US has its own beat over time. So if for any reason the core CPI rises, it's because core CPI measures a basket of goods consumed by household. So that means the major high-end luxury spending are not included. We're looking at the low average normal person's consumption. And one thing is definite. Whatever you don't make, you can't spend. So whatever you're spending is because someone has made it one way or the other. Either as transferred payment, someone dashed you, or you really earned it by working for it. Even if you didn't earn it, someone else earned it and gave it to you. So whatever it is you're spending is a function of earnings. You can't spend when you've not earned. So we believe that when they're spending, it's because there's money somewhere. Not be enough, but at least you have what it takes to be able to acquire those things. So anytime the CPI grows, we're sensing inflationary pressure, and that is a measure of an expansionary economy. I know that in this time now, it may not be the holistic view of it, but at least it sends a message of what is imminent. Then also in the course of the week, that's last week Thursday, we had the Empire State Manufacturing Index, which is positive, unemployment claims, which is also good. Even the core PPI, the PPI is a leading indicator, not a lagging indicator, because these are the purchasing price index for producers. If producers intend to manufacture or produce things, they need to acquire raw materials and other inputs into the production process. All of these inputs that they are gathering is because somebody is demanding for their product or they expect increased demand. So anytime we see PPI increasing also, is a leading indicator to a futuristic spending from the consumer. And all of this came out positive too. Even the consumer sentiment that came on Friday was marginally high, though short of the expectation. All of this tells that America might be on a path or was giving some sentiments that can aid the dollar by this week. Hence, looking at the news we're expecting for this week, the major pointers, yes, CAD has a news for today, later by 2:30 p.m. Then there's the FOMC minutes by Wednesday. But the main pointer that everybody's looking up to, apart from today's Wednesday's meeting, is March, when they will talk on possible rates increase. But this Wednesday, the minutes of their minute will give a pointer to what that March will be. So ahead of time, people can get some insight into what possibility of next month's increase rates will be. Either they'll be increased or kept flat as it is right now. If any pointer by Wednesday goes to the point that there might be a possible increase, it's not definitely just any hawkish statement that shows confidence or a boost in the performance in the economy, then we should see more strength for the USD. So that being said, let's go into our chart and look at how all of this translates into what it is we'll trade today. So I'm moving over to the chart right now, and I will be sharing the screen also. I'm on the chart right now. If you can see my chart, please kindly type chart. I've moved over to the chart. Please, if you can see my chart, type chart. All right, let's forge ahead. On Euro USD, you would see from the peak point here, price has been on a gradual downturn, as you can see. That's on a hard time frame. And looking at our current situation, if you look at H1, you can see that price got to a verified support as it is below here, and price is streaming back up gradually because price is hanging in the balance right now. Rather than plunging into a trade immediately, and we need to be very careful about this. Let me reiterate this, and you cannot overemphasize this point I want to give now. Even in a particular trend, you can trade in the direction of a trend and still have a drawdown or a negative trade. That's even if it doesn't go into loss for you. Reason being that for an uptrend, you have what successive higher highs and higher lows. But at any point in time, that you experience a pullback or a retracement in the market, if that happens to be your entry point, you may go on a negative trade or possibly lose a trade if care is not taken. So it's very, very pertinent to be careful and be selective about your entry point. Entry point is very key. So once you've been able to outline or highlight what a possible trend is, the next thing is to look for the right entry point. Hence why on an uptrend, we don't target to buy below a resistance. You allow that resistance to be broken first before you can pick a trade above that resistance. Because by the time that resistance becomes broken, it now becomes a support. Same also on the reverse case. If you have a downtrend, you don't pick a sell above a support. Rather, you allow that support to be broken, by which time it will now become a resistance, and you pick a trade below it, knowing that that particular initial support now acts as a resistance and hold price down. And above and immediately below this support and resistance, as case may be, is where you set your stop loss so as to have what? A possible minimal risk exposure on any possible trade you have, hence giving you a higher risk to reward ratio and a very tight risk exposure. So that being said, from the current chart we can see right now, let me zoom in a little. You would realize that price is already struggling at this verified resistance and it has become narrower here. And twice you've seen this two candlestick formation here indicating pressure of price upward. That's after price had gone down for quite a while, and it's ideal. The price has been trending in a particular position. As people are taking out profits, there will be east pressure and price will move in the opposite direction. Also, people are waiting for additional confirmation to follow through into that particular trade. So right now, if you're looking for a trade on Euro USD, if you don't have a current going trade, allow price to breach and break this verified resistance, in which case you can now think of a buy trade in that case, or set a sell limit at this verified resistance where you can see that price has not broken for quite a while. And let me draw a line there so that I can see what has happened in time past. That the only time price has been able to breach it, price came back within. Let me go back slightly so I can see. You can see that price has been below this level since the 5th of February. That's over 2 weeks now. Price has not been able to go beyond it. And even when price was above it too, that particular now resistance support held price reasonably, as you can see here. So what I'm saying is this. Any trade you're targeting on Euro USD today or in the course of the week, look for a sell limit at this verified resistance, which at my own price level here, 1.07871. At that point there, you expect price to come back down. Then set a tight stop loss above it. And if you have an ongoing buy trade right now, that particular level, 1.07871, should be your take profit point on this current Euro USD trade. Let's move over to GBP USD. From the chat, someone is complaining that my audio is scrambling. Please, if you know you can still hear me clearly, please type audio. If you can still hear me clearly, type audio. So then I guess the issue is not from my end. My audio is clear. Nearly everyone can hear me. Regarding my speed, I'll work on it. I'll reduce it a little so as to meet up with the need. I'll slow down a little. Someone says, Daffy cannot see my chart. Please, for the rest of us, can you see my chart? If you can see my chart, I've switched over to GBPUSD. If you can see my chart, please type chart again. If you can see my chart right now. So please, for those of us that are not hearing me, check your connection. For those of you that can't see my chart, everything seems to be working okay from here. Others can see it too. I think the issue should either be network or from your end. So moving on, for GBP USD. Let me change the view so that we can see the verified resistance and support. Same thing is applicable. GU and EU most often trade in the same direction, and that's because of the strength of the pound within the Eurozone. But also, I've seen a channel form of trading here, which can help us know a very good entry point. Let me sketch that out. All right, from what we can see here, zooming in a little, so I can pick good entry points. You can see that price has been ranging between these two, up and lower bound, which is a trading channel as it is, and price already comfortably sitting on it here and on its way back up. So already, if you're not on a buy trade on GU, you're already late. So what you might be targeting is what? A retracement up of this channel also. And note that a breakout is always expected at the point in time there will be a breakout. Right below here, we have false breakout, still false breakout here, or rather, let's extend more to cover for those shadow movements. All right. So now that we have afforded to cover some part of the shadows, see that this is comfortably sitting on it and price is now on the upside. So what we need to look out for is when price hits this top level, and which at my price level here should, depending on how fast it happens, should be somewhere within the price range of 1.2641 to 1.26544. Any point above this upper level here is a smart place to set a sell limit, because if price should get this high, we expect price to trade down a little. Or if this current forming candlestick does not end as a bullish candle and comes back down to hit this low point here, where you have these two bars side by side, that's at 1.25809, you can set a buy limit there, because that is the lower bound of this channel. And if price hits it, it goes back up, except if something else reinforces the strength of any of the currencies in this case, then you might have a breakout. So for the time being, as price is still ranging in between this dynamic support and resistance, we should take trades as limits either up or below. Or for the conservative traders, those that don't want to expose any level of risk at all, allow a breakout. Let price break beyond it and pick a limit trade either below or above, as the case may be. What I mean is, if price should cut below here, below this lower bound here, you can now target a sell limit above it. So as price comes to retest, and if it holds price down, price is on its way down. Or wait for price to break above and set a buy limit below. So when price is coming back to test this upper bound of the channel, it picks the trade and goes up. The semblance happened here, even though it could not be upheld. Look at price broke here, hit this, went up, came back and would have triggered a trade here, but it did and came back within the channel and has been held within this channel. And this has been since last week, Wednesday. So I still also feel that price will trade within this bound here till Wednesday of the FOMC meeting. So for today, price is within this particular range here for GU. Let's check USD CHF. We moved over to USD CHF. You can see same, even for the USD CHF, price has been on a rally, which is still also a continuation of the strength of the dollar, as we've said. This is a reinforcement of it. And for those of us that might be joining for the first time or are new to this particular experience, the CHF is the appropriate measure for the strength of the dollar. If you want to know how weakened the dollar is, use the CHF, because the CHF amongst the other currencies, that of the major currencies, is the weakest amongst. So for any reason, if the CHF trades stronger against the dollar, then you should be aware that every other currency will be stronger than the dollar around that period. But in this case here, you can see that USD CHF went up. This is an indication that the dollar is still strong too, even in this case. Also, I can see that price seems to be trading in a range. Let's sketch that out also here. You can see price has been within here. So if you be thinking of any trade here for your USD CHF, don't plunge in. Price is already in the mid-range here. Allow price get to the top here where you have a turncoat resistance. And the beauty about turncoat resistance is that's a measure of if price will make a retest or not. 80% of the time, when the turncoat resistance or support is broken, price will always make a retest. So for those of us that are conservative traders, let me take a pause and confirm, please. Am I still fast or is this speed okay? Hello, if you can hear me, am I fast or this speed is okay now? Well, some people still feel I'm still fast, even though most people feel it's okay. All right. I'll sit down and tone it down. All right, so what I'm saying is this. Price is already hanging in a balance. This is not the right time to enter. Let me repeat. I've said it before, and I cannot, or no one can overemphasize this. Every good analysis or trading software or strategy must give you three key things. First off, you need to know the type of trade you can place based on that analysis that that software gives you. Please, all together. First things first, you must know the type of trade it supports. Two, you must also know the right entry point. Very crucial, because an analysis can be as good as you can think. If the entry point is wrong, it will still go against you. That's the truth. So you need to know the right entry point. Then finally, it must always indicate an exit point. It's the exit point that makes it easier for you to manage your risk appropriately. Because when you know where to take your profits and you know where when price goes against you shouldn't be in the market, those are places to set your stop loss and your take profit. So as I was saying, in this current trade right now for USD CHF, based on this channel I've sketched out as it is, it's not smart to plunge into a trade midway as it is right now. Even going to the lesser time frame of M15, you can see that even though price has been trending upward, you still cannot place a trade there. And same as it was on H1, you can see that this turncoat resistance is still indicated above this upper line or bound of the channel. So the smart thing is to wait for price to break above this upper channel for a breakout. If this had been a verified resistance or a proven resistance, I would have told you to set a sell limit right at that point and be waiting for price to hit it and pick a sell trade on the downside for you. But since it's a turncoat resistance, let me make an analogy for you. A turncoat is like twisting your cloth inside out. That means it can easily be flipped. And once it's flipped, the inside becomes out, the out becomes, I mean, support turns resistance, resistance turns support. So for a turncoat resistance here, once price breaks it, it's good to now wait for it to come back for a retest. Then you pick a trade at that point. So if you're one of those that is open to some level of risk, you can set a buy stop above the turncoat resistance, waiting for price to get there, pick your trade, which is the upper bound of this turncoat resistance as we have it here is 0.88488, 0.88488. But if you're one of those that is not in a hurry, you want price to make a breakout first and then wait for the retest before you pick your trade, allow trade to break above it, then set at that same 0.88488, set a buy limit, meaning price has already broken it. You're waiting for price to come and retest it and pick your buy limit trade into a buy trade, then price goes upward in your direction. That is what I expect for this, because price going down here as it's an untested and verified support, and price has not gone back to that point again. So I expect price to head back upward to the high it has made last week until tomorrow when the FOMC minutes will be released. USD CAD same is still obtainable. And for most of the instruments I've seen here today, from GU, USD we just check, even right here with CAD, you can easily identify a range that channel has been trading, price has been trading in a channel across all of these three instruments right now. Same as before. Allow price to break out. If you already have an ongoing trade and buy, then price is still going in your favor. Keep your trade. If you're already in profit, protect your profit by either moving your stop loss above your entry point to cover some profit, or what's possible, to your entry point, so that you can be at break even. So that no matter the situation on this trade, you can never lose again. But if you're on a sell trade, then be rest assured that if price should break above this particular channel, then danger is looming. Because price already is at its recent high, as you can see here, 1, 2. But for the channel proper, price has to still go a little bit above price level 1.35139. So if you have a sell trade and price is still going against you at 1.35139, you should consider how to manage such an exposure. Let's check gold so that we can at least have one commodity. So all of what we've been reviewing since. For gold, you can see here, I already have this particular level here highlighted from time past, showing a critical support region, as you can see. This level here had been identified since November of last year, as you can see, 1, 2, December, and here it is, still being honored last week. But let's change the view so that we can see the current support and resistance as it builds. All right, so zooming in, you can see that price, after this plunge here, when price came down last week, which was a strength of the dollar indication, because the dollar and the gold have a negative relationship because gold is priced in dollar. So if the strength of the dollar increases, that means a small amount of dollar can acquire higher volume of gold. Hence, why gold will depreciate at any point in time that the strength of the dollar increases. And when the dollar strength reduces, gold appreciates, because it now means that you need more dollars to acquire the same volume of gold, which is what has played out. Why gold has initially, as you can see on this chart, been on a downturn, but then after hitting that support level, has been on its way back up. So now, based on what we have right now for gold trade, if you're thinking of any trade on gold right now, you need to consider the fact that gold as it is right now is already at a resistance. So this is not the right time to plunge into any trade. And I will also think that rather than just plunging into a trade right here, it's better for you to target a retracement here. But let's look at the lesser time frame so as to see whether there are possible better entry points for our trade right now. Okay, based on what we have on the M15, which is not a good analytical point for picking key resistance and support points, because it's too small and you have a whole lot of noise. You can see there's a verified resistance that we just want test count. So it's not enough for you to think that this price will plunge down from this point. That's the truth of it. But if price tends to break here and goes above this recent high on your 15 minutes, which are this level here, you can target a buy limit while waiting for price to get back to this closest high here. And from that price level, when it breaks there, that's at 2020, that's 2023.24. You still have about 45 pips to get to this recent high here. And since it has been going with the tenet of an uptrend, which is higher highs and higher lows, you only need this current forming candle to build a high beyond the high from last week. Please, are we following? We have one high here for yesterday where price got to So once this high can go beyond the high that we had, but the M15, something is holding it back. So we can use that to pick a price level for our lookout so that we can know where to set our trap. So once price breaks above 2022.97, once price breaks above 2022.97, then we can think of entering a long trade on your gold and targeting this recent high here, which is about 45 to 50 pips movement in profit in your direction for the gold trade right now. Let me look at the chart and see what questions we have. MarketWatch cannot cover the view, please. MarketWatch is fragmented, just a very small portion of the chart. So I don't see any reason why it will block the chart. If it's blocking your chart, then I think something else might be wrong. I don't think it's the MarketWatch that is covering. But let me remove it so that I can see. Here's the MarketWatch. It's not in any way interfering with the chart, because what I'm checking on the chart is the current happenings, not the past where the MarketWatch is. So that shouldn't have much of an issue. Oh, USD JPY. Someone mentioned we check USD JPY. On gold, is going to be a buy limit. Allow price break above this price we're waiting for. Then once it breaks above it, price does not just go flat in a direction, except if a fundamental pushes it. And since we're not expecting any fundamental today, and price is already at that resistance, allow price to break it, then wait for a retest at that. Let me pick the price level again. For gold, allow price to break it, then wait for a retest at 2022.90. Let price break above it, then price comes down to retest it at 2022.90. That is going to be a buy limit. But that will only happen after price has broken it, or for those of us that have MT5 to set it ahead. But if not for MT4, until price breaks above it, you can't set that. Okay, yes, for the USD card, the CPI news will determine the movement on that today. No disputing, it's going to affect. So as it is right now, thank you for bringing that up. I've stated it already, just I didn't align it with the analysis. Is that once the CPI comes at 2:30, by then, hello, please, are we together? I'm going to go slow on this one, and I want to run it to one so that we can pick it. We've already made analysis on USD card, indicating that pressure is on the upside. That means in favor of the USD. Because anytime price is rallying or you have a bullish movement that's buy possibilities on any instrument, a currency pair, is in support of the strength of the base currency. Anytime price is on the downward trend, a bearish movement, that means price is in support of strength of the quote or the variable currency. So in this case here, what we can say right now, as price is gradually tending upwards, is still a sentiment in support of the USD, not the card. So if the news for card comes out positive, and how positive will it have to be a major factor here? You have to check what the core CPI. Core CPI is a major measurement here. It has always been 0.3. It's expected to go to 0.4. Anything that keeps it flat is just a speculative trading. You need it to hit that 0.4 or above for you to be confident that the strength of the card is enshrined. Then you expect price to come down. So in this case, when that happens, a sell trade or short trade is imminent. That means USD card will go on the downside based on the strength it will get from that report of that news. It will reinforce the strength of the card against the USD, and price will flush down. In which case, if that happens and price is still at the upper part of this channel, that means it will also coincide with those that would have set some other pending orders, thereby intensifying the strength of the card, pushing or pulling the USD down. Then please keep in mind that the lower bound of the channel should be your take profit point, so I don't stay too long on that trade, which is quite reasonable. That's about 35 to 36 pips. And if it goes beyond that, The verified support here at price level 1.34665 is another thing to look out for. Because even if fundamental pushes news, it just does not break verified and proven instantly. It may break every other type of support and resistance, but verified and proven tends to hold trade for a while, except price is already relaxing on this or resting on it, which is not the case here. So that is that for the USD card in relation to the CPI news for today. USD JPY, let me check USD JPY. Someone brought that up as a question. Let me check that question clearly. USD JPY has been buying since yesterday morning, but we sell around 151 or below. Let me see whether the chart confirms that also. All right. If there will be any sale, you're right, somewhere around 151.333, you have a verified resistance there. But the smart thing is, even at the current recent high, which is 150.871, price might still be pushed down from there. So meaning if you have a USD JPY trade right now, price still looks on the up. But right now, look at the current formation is indicative of a gradual downturn. Because for a trend, you need at least two successive lower highs and lower lows. But here's the challenge here. We've had, because I'm on H4 here, I'll pick it from here, then go to the lesser time frame to assess what the movement will be. This is one high, this is a lower high, this is another lower high. That means price should be tending downward. But here now is the confusion. This low is getting higher. That is building something we call a symmetric triangle. Let me set this trend line with Ray so that we can see the futuristic buildup. All right, that's the upper bound. Let's sketch for the lower bound. And if I don't want to make it too long, I can pick from here. All right, so going to H1 now. This is what we have on USD JPY. So where price is currently, price is going down. It won't even get to that high. So now, how you can tell where the stronger direction will move? If you're not on a sell on USD JPY already, this is not the right time to enter. That's the truth. But if you're already on a sell, please sell it down to first the closest support here, which is about 20 pips from the current price, 15 to 20 pips. And below here, at this lower bound here, as I've sketched here, is your take profit points. So these places are the points we're looking at. If price comes to this lower trend line here and breaks below it, then you expect price to continue downward. If price should break this upper part and stay above it, then expect price to go upward. So what you need to do from your own chart is connect this, as I have it on my own chart here, across. Connect the lower bound to, as you can see from this shadow, 1, 2, 3, and wait for price to break either above or below. Once that happens, then pick trade in the direction to which price breaks. That is how to pick for USD JPY. So price will not even get to 151 as the question is from the person that asked this question before price will go down. It's already going down based on this trend line, this downtrend line here, sketched up here, above here. All right, I might not be able to pick all questions, but let me add one indices to it. I've seen US 100 on like 3 questions here, so let's look at US 100. All right, US 100 has been on a high, and I've seen that it's created a recent high. The high created by 9th of February is arguably the highest for this year. And let me see how long ago it took to get to that. All right. Wow, such a long time getting it. All right. So that being said, for USD 100, what I'll suggest to you is this. With what is playing out here, anytime price makes such a sharp high, it always has a pullback. It has to correct on some of those values, like I've tried to explain sometimes to you, that we have profit taking along the line with all of this. But let me see whether there's been any divergence, formation, or buildup. Okay, the initial divergence has already played out, and there's no current divergence. It's normal market movement. All right, so that being said, let's look at it normally. Okay, right. Price has a turncoat resistance, right? You can see price has broken it. Remember that thing I said about turncoat resistance and support? That once price breaks it, it has a very high chance, 80% chance of price retesting it. Look at it playing out just now. Look at this resistance now, indicated as resistance. Please, very key. Can you still see my chart? Please, you can still see my chart. I'm on USD 100. I've seen a couple of persons request this. I need a response. If you can still see my chart, indicate chart for USD and for US 100. Hello. All right. Thank you. So looking at what price is doing right now, remember what I mentioned regarding turncoat resistance. You see it playing out right now. That this resistance you see right now, for those of us that are new to this concept, let me take it back a little. A resistance and a support are one and the same thing. They are two sides of a coin. It's like head and tail. Depending on which side you flip to, that's what determines what you see. Price is a major determinant of whether a particular region or portion is named or labeled a resistance or a support. Once current market price is above a particular level that is holding it, we call it a support. Once market price is below it and is being held below, we call it a resistance, meaning a resistance prevents price from going up, while a support prevents price from falling down. So at any point in time, when a resistance gets broken, it becomes a support. And when a support gets broken, it becomes what? A resistance. So in this case here, as you can see, price was held up by this resistance, but then it was acting as a support. And the moment it broke below it, price stalled here. Let me use the compass so that I can see. The price was stalling around this period, and price has gone back to test it. Meaning on your USD 100 right now, you can look for trade on the downside. And the fact that it's going to be a tight one, you can easily set your stop loss very close above this turncoat resistance now at 17747.51. So if for any reason something else pushes the pressure of price, you can be protected and allow price sail downward. But please also keep in mind as price is going down, we have two verified support very close. First one that has had a two test count is at 17567.27. So you can target that as your first take profit point. And if price breaks below it and you are around and can expand your take profit, you can take your take profit to 17473.99, meaning you have two levels where you can set your take profit for US 100. Looking at the lesser time frame to see whether there are other closer points that supports this, you can see that the same thing on your 15 minutes, that price at the turncoat resistance. And once it goes down, that same support level is still here at 17553. So for USD 100, you can go into what? A short trade right now, set a very tight stop loss level to protect yourself on that trade and look on the downside for profit on your sell trade. How do we draw support and resistance? Drawing support and resistance is very key at higher time frame and when you look for major areas. Let me show you a plain chart. All right. For those looking for support and resistance, I'll pick that, please. But let me respond to this other question here. The person is asking, or rather suggesting, that the uniqueness and difference of each time frame in trend, support and resistance, and general market chart structure should be indicated, because buy setup in 15 minutes may not be buy setup on 4 hours. All right. User, I don't have a name for you, it's just user. Understand, please. There's something we call multiple time frame analysis. The essence of always looking at H4 as H1 is to see what the larger time frame is. But we know that most of our clients fall within scalpers and intraday traders. We have very few swing and positional traders. So since we know what is obtainable at our end, we need to keep that in mind and work with that with our analysis. That is why if you realize, anytime you're placing a trade, by a rule of thumb, that whatever time frame you use for your analysis, especially when trend is involved, and the least time frame to pick out a credible trend is H1. Just like your elementary statistics, that the larger a sample size, the more a representation of the population it is. So H1 would have more data at the longer term than lesser time frame. 15 minutes will have data that create noise that are not stable or steady. So that is why when you're looking for trend analysis, the least you can pick from is what? H1. But when you're looking for entry, you're looking for what? The closest possible point. So by a rule of thumb, is always a quarter of it. Meaning, if I make analysis on H1, I'm looking for a faster entry point. If I'm not trading with candlestick pattern formation, where I need a fully formed candle to inform my decision to entry. If I'm looking for tenable points, then I can go to what? 15 minutes. If I did my trend line analysis on D1, on H4, my entry point is H1. H1 is 1/4, a quarter of H4, and you see a better entry point. So please, that is the reason why. So you realize that I was not making trend analysis on M15. It is after we've analyzed, we're now going to look at the lesser time frame to see whether it coincides with. That is why if I see an uptrend on H4, H1, and I'm still seeing the same build-up on M15, I now know a faster point of entry, because bear in mind that your H1 and H4 started from M1, multiple of M1, multiples of M5, multiples of M15, couple of M30, then you have your H1. So they are connected. It is only when you see it as an uptrend and you're looking for a trade in the opposite direction, that's a bearish trade, that is where there might be a challenge, or you should have a different technique to trade. That means you're someone that is targeting to trade retracements. Then you need some other setups for that. So with this, with the typical price action, this is what is tenable. So for the person that asked, how can you pick out support and resistance points? Let me show you on a plain chart. It's easy. Yes, it needs getting accustomed to, but you can easily pick it out. For that, H1, H4 are more dependable. So I can pick what? Key support and resistance levels. What you need to look at is where price has had issue over a period. Case scenario, you can see that price has had issue over here. And rather than picking just the sharpest low or high, look at the one that connects the major points. In this case here, this here is an average of all of this. So this here is a false breakout. If you are looking at the higher level, look at it here. And if you go into time past to confirm this, or lesser time frame, you see that it is honored also by price. Look at price. It's still being honored. Hold on, I'm trying to pick a very long period for you to see that these are things that are consistent. That's what I call technical analysis. What price has done in time past to predict what? Future market movements. All right, this is an happening since 2021, as you can see here. So let's do something real quick here. If we zoom in slightly, we'll see that price was held somewhere here. So let's come back. Oh, sure, let me change the color of this and use it to trace recent happenings. Let's change this to say aqua. H4. You can see that this was happening sometime in 2021. And look at 2023. It's been obeyed. Held price here, held price below here. Held price, holding price down. See, price touched. So if you want to pick a support and resistance, just look at the shadow formation and a peak or a throw. That's a low point or a high point. And see where price had an issue. When you can see 2, 3, it's easy to build up on. Not one, please, not one. You need to see like 2 or 3, then you what? Shade out or mark out that portion. That is a support and resistance point. But over the years, research has shown that support and resistance are not just a static, precise point, but rather a region or a zone. Hence, why this support resistance plug-in here is a better fix. Please, are we together? This is a better fix. And you can get this from reaching out to your AM or tell them to give you my contact. You can reach out to me too. I'll send you the link. You can download and install it. And the beauty about this particular software is that it is updatable. You can update it to show recent happenings. All right. I think for now, these are the whole number of questions I'll be able to pick today. So for those of you, I can see some other questions, Euro JPY and the rest. I might not be able to handle all of those. You know, it's just what it is. Apologies. Hopefully, when next you get lucky enough, we'll be able to pick your own question. But please note, the major reason why I often concerned more with those majors are that we know those are the most tradable instruments. Euro is the most tradable instrument across board, the most traded currency pair. So all of these are what we concern ourselves because we try to want to, as much as possible, reach out to the generality. So for those of you that have precise need or request, you can always fall back to account managers or reach out to any of our seasoned trainers and we'll be able to guide you right on how you need to follow up on some of those trades. So thank you for joining us for today's session. My name is Olabisi Olaleru. Do remember to join us on our YouTube channel too for any of these classes. So if you have missed any part of this particular analysis today, this MMR, either you didn't join on time or your network cut you off at any point in time, you can watch the recorded session, which is on our YouTube channel as we speak right now. And you'll be able to get all of this information. So if you didn't get any of the price levels I gave, you didn't get any of those price points, or you're having an issue marking out those points where I picked for our symmetric triangle and for those channels, you can pick all of those there. So thank you for coming around. We'll see you. Do have a good trading week ahead. Bye.